Okay, folks, welcome back. This teaching will be dealing specifically with the ICT New York Killzone. Okay, the New York Killzone. What ICT concepts are going to be used in this module? Again, the importance of time and price, the New York Open, the New York Session, and important characteristics of the New York Session. Okay, the New York Open. Now, the majors that are coupled with the dollar index, or the dollar, that to me is the ideal pair for this time of day. The New York Open frequently sets up an optimal trade entry pattern that can offer 20 to 30 pips as a scalp. Now, the key times to monitor are 7 a.m. to 9 a.m. New York time. This is what I refer to as the classic ICT New York Open Killzone. Every single day, Monday through Friday, I believe that if a trader were to scan through the majors that are coupled with the dollar index, they would find a setup that would offer 20 to 30 pips. I teach that as a means of inspiring study, but not to encourage you to try to trade every single trading day. Every day there is an opportunity for you to study, but that does not mean to go in and try to trade with live funds every single trading day. So by having that expectation that 20 to 30 pips exists every single day, Monday through Friday, that's again not an inspiration for you to go in and expect the 100 pips to 150 pips a week. I look for my personal trading is 50 to 75 pips a week. So between what I've shared so far with the London Open, with the Asian Open, and now with the New York Open, you have 3 opportunities every single trading day to look for an opportunity to get those specific objectives for the week. So I know that there's a high probability that I can get my entire weekly objective in one solid London Open if it moves a lot. If I do not get it, or I do not get a weekly objective, which is my one shot, one kill, where I trade the weekly range, because that's really what I'm framing my setups on. But if I miss it, or if I get it wrong and I have to mitigate a loss, I will use New York to mitigate any mess ups that I make during the week. My focus is at the beginning of the week, because Monday, Tuesday, and Wednesday, if I operate most of my trading, many times all of my trading is then. But if I take a loss, or if I miss an opportunity, and I still feel confident about the weekly objectives still coming to fruition, that means I see a setup that's still viable. I will go in and trade the New York Open to get those small little scalps to add up to 50 to 75 pips. So I'm confident that I can get 20 to 30 pips in a New York Open in one of the majors every single day. That's my experience speaking. It's not an invitation, again, for you to go in doing it. What I'm trying to encourage you to do is go through the charts and see if what I'm saying isn't exactly what you see. Every single dollar-based cross will give you a setup between 7 a.m. and 9 a.m. New York time. It's the easiest time to trade because we have the luxury of having London overlap and New York. And looking at the chart on the right, this is a Aussie dollar pair, and we can see that right in here, I'm delineating the New York Open here. That sets up the opportunity, and the optimal trade entry is seen here. The London low, initial daily high, the retracement, and then a subsequent expansion, creating the high of the day. Everything framed relative to what is seen on the London low for the buy. Wait for the retracement between 7 o'clock and 9 o'clock in the morning and rally. Now there's a lot of things that goes along with making this setup identifiable. Obviously, it's very easy for me to point to these in hindsight, but experience has taught me how to see these things by a small sample size of conditions. Okay, not all of those conditions are going to be taught to you in my free tutorials, so you're welcome to join the mentorship. You get all the details that are not there, but you will get a lot of insights just from the free tutorials. For now, I want you to just be content with identifying between 7 o'clock and 9 o'clock in the morning, Monday through Friday, when the dollar crosses. In other words, every pair that's crossed with the dollar, if you watch those pairs between 7 o'clock and 9 o'clock in the morning, and if you have a job or if you have a business and you can't trade this particular time of day, even if you look at it in hindsight in the evening after the market has closed, you'll be able to see many examples that repeat themselves every single trading day. But again, every pair doesn't have a setup every New York Open, but every New York Open has a setup in one or more of the majors that are crossed with the dollar. Now, everything I say is reversible, if you will, and we can see the same scenario for the euro dollar. We have an opportunity to see both sessions here. The Asian session creates a swing high, the London Open creating a high to sell short from, and then the New York Open retracement creating a high, and it expands and goes lower. This particular pair in this day, I actually traded this, and the examples are shown on my Twitter, and you can find that for your own study. But for now, just understand that between 7 o'clock in the morning and 9 o'clock in the morning New York time, there's typically a setup that forms that offers 20 to 30 pips. Okay, the New York session. The price action during the New York session sees a consistent round of economic news releases. Now, these news releases will many times stimulate price action, and sometimes it's predictable, and other times it's not. Sometimes these news releases will cause reversals in the marketplace, and sometimes they'll add fuel to the fire and or momentum to an existing daily bias. The New York trading session actually extends beyond the 9 o'clock hour, and it goes to 2 p.m. in New York time. If you look at the chart here on this dollar CAD, what I'm delineating here is those specific time points when the New York Open begins and 2 p.m. in New York. Again, as I shown in the previous session or kill zones, everything is fractal. So if we see the open here and we're bullish, we would see it open, a small little decline, creating the low of the range, expansion, high of the range, and then comes off the high and closes. Just like in Power 3 on the daily candle or bar, we can see the New York session creates that same fractal pattern. Again, same scenario here. You see an open, it trades down, creating the low of the range, expands up, creates the high of the range, and comes off the high and closes. Power 3 applied to the individual trading sessions. Now again, there's a lot of things that goes behind the scenes, if you will, that builds these models or expectations for when price should be doing it. The clear and obvious one that I'm going to show you in my free teachings is we have a previous low, it rallies, it trades back down into a retracement for an optimal trade entry between this low to this low. Okay, so we can see using previous day's lows to the session low for New York, we can get an opportunity to be long with this scenario. The New York session characteristics. The New York session typically has two potential scenarios: continuation of London's move or a complete reversal on the daily direction. Now, it's not my goal to teach you market reversals because, quite honestly, there's a lot of things that are required to do that. But there's some things in the tutorials that will help you, but it's not going to be complete science because it takes a lot of information and a lot of teachings to supplement those conditions, and even then, it's not going to be clear to you. Experience is going to be the teacher, if you will. But the continuation of the London move, I believe, is the easiest, and that's why I taught in my free tutorials that approach. So when the daily chart is in a clear one-sided momentum, It is easiest to look for the confirmation of that direction in London price action. For example, if London agrees with the daily chart being bullish, that means we should be seeing a low form in London. We would anticipate a retracement lower in the New York Open and in agreement with that daily bias. So we would anticipate a New York low to post a continuation setup or optimal trade entry buy. Again, reversals they require a lot more things that I can't teach in just one video. There's so many things that goes into that, and if you go through access my old teachings, my old free tutorials, there's a lot of emphasis focusing on higher time frame, higher time frame, higher time frame. Now there are times as a well-experienced trader that's been doing it a long time like myself, I can trade any time frame, and I can also look for reversals that would go contrary to the higher time frame direction. You as a developing trader may not have that diversity yet, but you will have that over time. Experience is the teacher in that. Now I give a lot of details about that in the mentorship, but you don't have to have that. Okay, you don't need that. If you get accustomed to trading continuations and trading in agreement with the daily bias and only taking those setups, you will have the best setups. Because sometimes the reversal patterns, sometimes they're great and they pay out a lot and there's big movements and pips. Other times it's not so much and they can be rather disappointing. So it's much easier for us to see the daily bias on the daily chart where that momentum is and trade in that direction, because that's going to be the most likely expansion or the most likely side of the marketplace to be on where the big moves are going to occur. Again, there's going to be shocks and retracements all the time that come in the marketplace that are either expected or unexpected in the form of reversals, okay, or deep retracements. They're not necessary. They're very exciting sometimes, real quick, one day or intraday declines or rallies to retrace to another optimal trade entry sell, something like that. Try to convince yourself that it's much easier to trade with the daily bias and to look for your daily ranges to expand in that direction. You're going to see folks online that are going to be showing a lot of trades they may not have taken. They may not actually have any any horse in the race, if you will. It's just them talking about something that's already happened. Try to just keep your focus on looking for scenarios in the New York Open that are in agreement with the daily. So if the daily's bullish, we're looking for London to create a low, and then at 7 o'clock in the morning, we're going to be looking for some measure of a retracement lower. Then we'll be seeing, or anticipating rather, a optimal trade entry to go long at the New York Open, and anticipate expansion on the upside on the daily range, where we would expect that range expansion for power 3 for the daily bar or daily candle. That's what we're looking for, that dynamic imbalance. Okay, I have an example of that here on the dollar CAD. We have a London low formed, and we can see that the market did in fact come back from this low to this high. It retraced rather deeply here. Optimal trade entry long here. Then price rallies away, and then we have a retracement lower in the New York Open. And several things in here. There's an optimal trade entry, and there's also a run on liquidity. We have equal lows in here. In a bullish market, the market comes down into New York Open, takes those stops out, and then rallies. So that would be one scenario we can look at here, and the continuation of the daily range on the upside and reaching for relative equal highs. The liquidity pool resting above those highs, you see it reaches for that rather handsomely. Okay, so New York Open, in my opinion, and I've been doing this for a very, very long time, it's so much easier to trade that session because it has a built-in advantage. And the secret to it is what's going on in London. Okay, if you can arrive at a daily bias on the daily chart and then wait to see if London supports that notion. If it's bullish and London creates a low and we've rallied and then we start declining into New York Open, it's pretty much a loaded deal. You're going to have a scalp that would offer 20 to 30 pips in New York. And if you're new, you're probably not going to appreciate that too much. But if you have been trading for a while and you just heard me explain that, you're going to be rather surprised and tickled when you see how often that unfolds, because you have a little bit more experience in reading price, and it's going to jump off of the chart at you. And then suddenly you're going to see a lot of opportunities that otherwise went right over your head. So hopefully you found this teaching insightful. If you enjoyed it, you can find more at theinnercircletrader.com.